Welcome to the IRS Solution Attorney Show. If you have problems with the IRS, don't focus on the negative, focus on the solutions. With the IRS Solution Attorney, Darrin T. Mish. For over 15 years, he's been helping taxpayers with IRS problems reclaim their lives and their financial stability. Now, here's your host of the IRS Solution Attorney Show, Darrin T. Mish.
Good morning. This is your IRS Solution Attorney, Darrin T. Mish. I'm joined by my co-host, Katrina Madewell. How you doing, Katrina?
That's me. I'm doing great. Good morning.
Good morning. It's really nice outside. It's nice to see the sun shining. The birds are chirping. The bees are, whatever bees do, buzzing, right?
I'm going to have to, pep you up because you are, in a lull this morning, and I can hear it in your voice, Darrin. I'm not ready to kick him. Should I kick him back? Should I tickle him? Let's call Heather and ask her what the magic thing is to pep up the IRS attorney.
I thought he was a little quiet this morning.
Yeah, he gets like that. I got to pep him up.
Yeah, you haven't had any? I'll go get you some coffee.
He reminds me of my husband in some respect. He gets these little funky moves. I'm like, wake up! What's the matter with you?
I need some coffee, some Diet Coke, something like that.
But we do have a great show lined up for you this morning. And so Darrin's team has put together 8 strategies to help you save taxes in 2016. Isn't that a great topic?
That's a good idea. Now, how am I going to be able to listen and write all this down if I'm going to get your coffee? And did you want 2 sugars and cream?
You'll just have to listen to it on the podcast later, I guess.
It's on a podcast, yep.
The good news is I actually have a bonus strategy, too, because although my team did put together 8 strategies, as I was reviewing it, I thought of a 9th. So I don't know if we're going to have time today, so we're going to have to buzz through this stuff.
Yeah, we will. If you have questions towards the end of the show, we will take your call live. We are live in the studio today, 888-404-1010. I'm sure you have that number saved in your phone, but if you don't, it's 888-404-1010. And you'll be registered to win an FPU scholarship.
What's FPU?
So FPU
sounds like Florida Power.
Financial Peace University. So Dave Ramsey moved over to the station a little while back, and they were syndicating the afternoon show in the mornings. And so a lot of the people that listen to 1010 are big Dave Ramsey fans, as am I. Mm-hmm. And I'm on the list, although I'm not supposed to say the list, but, that list.
Yeah, he's great.
And so Financial Peace University is kind of like this total money makeover. He has a book called that, but he's the money guy, number 3, nationwide in radio.
Okay. Well, that sounds great. That scholarship to that sounds like a good thing.
Do I get entered
to win that, potentially?
Probably not. You have to call into my show tomorrow. But it is great. We host it in our office a couple times a year. Most churches have it. You can sign up for it, on his site. But anyway.
We'll have to check that out.
Back to the 9 strategies to help you save taxes in 2016.
The first strategy is actually pretty common sense, right? It's make sure you file your taxes early or at least on time. So the filing deadline, we've talked about this before on the show. The filing deadline this year is a little bit later than normal. It's the Monday after April 15th this year, unless you're up in New England, and then it's the Tuesday. I think that's the 18th or 19th this year. But just make sure you file your taxes early. So if you're going to file with a tax preparer, odds are they're going to file those things electronically. And so just make sure that you get, some kind of electronic confirmation from your tax preparer. And that'll be, that'll suffice in case it'd prove that it wasn't filed late. Or
usually the ones that are late, we shouldn't tell them they have a couple extra days, right? Just make that a surprise.
Yeah, just try to get it done by April 15th. That's always a great idea. And if you've got a refund coming, obviously get it filed on time.
So when you say file early and on time, like April 15th, we talked about that extension through, October 15th?
Correct.
Okay. So is there a penalty if you file late, or is that just an automatic they give you if you need to extend your filing date?
To the best of my recollection, the penalty for filing late, if you have a balance due, is $500. So you're going to want to make sure to file an extension if you know you can't get your taxes done on time. And in theory, you're supposed to pay your taxes on time, even if you file late. So you're supposed to have your estimated tax payments paid in by April 15th. I don't think a lot of people get that done. But I have a little story about filing your taxes early or on time and being able to prove it. If you're going to file a paper return, I think the best advice is to go ahead and send that thing certified mail by the Postal Service. One time I filed right on the 15th, and I got a letter back about a month later that said, you're being penalized because you filed late, et cetera, et cetera. And I kind of knew better, but I called the IRS and I said, well, I didn't file late, I filed on time. And the lady said, well, did you have one of those little green, slips from the post office proving that you mailed it on time? I said, as a matter of fact, I did.
Wait,
So-
what do you mean the green slip saying you mailed it on time? What are you
You know,
talking about?
when you-
Because I'm thinking like the people in line at the post office to drop it in the box at midnight.
Okay, so when you mail something certified mail from the postal service, it comes on. There's a green receipt that
okay.
gets round,
Yes,
canceled
yes. Okay.
at the
I'm
post
thinking
office.
physically drop it in the box.
And
Got it.
so I mailed that in to the IRS to prove that I had mailed the return on time. That saved me $500. And since the certified mailing costs right around $5, I figured that saved me 100 years of certified mailing expenses.
But the question is, did you certify that when you mailed that in?
I did, in fact.
Okay.
So it cost me another $5.
So in this day and age, could you like hold the envelope up next to the clock in your car with the post office in the background, take a picture and like drop it in? Does that count?
That's not going to fly. I
You
don't
love
think.
my creative thinking. Come on, it's
There's
fun.
also something you can get that's called a proof of mailing. And I think it's about 75 cents or $1 or something like that. But certified is like the tried and true.
Does
you
the
know.
airport post office say open late, like inside for
Yeah,
that?
they're open
at that night?
They're open either till midnight or 24 hours a day. I know they used to be open 24 hours a day out at the airport. And I think that's because there's a giant mail sorting facility right there at the airport,
Yes.
which makes lots of sense, right? Since a lot of that mail is going on the airplanes. So they're open quite late. They're nice folks over there too. So the second option would be when you're getting ready to do your taxes for 2015, try to remember all the big expenses that you incurred as well as the smaller ones. Take a look at last year's tax return so that you can, try to start to get organized. I mean, that's the biggest thing that I see that people do is sometimes they leave big deductions out because they're just not thinking about it. It's just not top of mind and they're not organized.
Well, you're trying to remember stuff, from a year back. I mean, one of the things that I do is I use shoebox. So I get this magic blue envelope that comes in the mail, literally stuff all the receipts in there. My process now is I give it to the bookkeeper because we talked about my super late filing returns when my QuickBooks crashed. So the bookkeeper gets it. She does all her magic and then she sends it off. But I took that out of my hands because I just realized I'm not that personality. It's not my highest and best use.
Yeah, I don't think it's most business owners and entrepreneurs' highest best use either. Is trying to keep their tax stuff
And
organized.
for what I pay the bookkeeper, I mean, she probably makes sure I don't miss those deductions. So she's worth every penny I pay.
Yeah, and she's deductible as well, right? I mean,
She is
her
deductible.
expenses are
She is deductible.
Shoeboxed.com is kind of a neat service that you just referenced. It's shoeboxed.com.
Yeah.
And
Thank you.
basically, they're not a sponsor, but I mean, it's a great service. And basically, what they
But
do.
some kid, like a 15-year-old kid, created that company. Did you know that?
It's a pretty simple concept, right?
But think how awesome it
You
is.
stick your receipts into an envelope and you mail them to them, and they scan digitize them, and basically organize them somewhat and send them back to you.
So
And it's pretty
charitable
inexpensive.
deductions, that's on the list. Let's talk about that because I remember I did a show on Tampa Home Talk and we talked about some of those things in charitable deductions. And so we had this conversation about, okay, you go and you drop all this stuff at the Salvation Army or Metropolitan Ministries or wherever you're donating, and they give you a blank receipt most of the time. So then you're trying to figure out, how do I do that? And so the advice that I got from a CPA, and you can chime in on this, was to physically list out all the items and then try to figure out what they resell them for by looking on Salvation Army or .com or whatever, and then physically taking pictures of them. That's what he suggested. I never would have thought of that.
Yeah, in audit defense, those particular charitable donations are really hard to defend. You need very good records. You need very good receipts. And it does make me laugh, too, when I drop something off at Salvation Army or whatever, and they give you the blank receipt, kind of like the taxi driver gives you the blank receipt after you get out of a cab. They need to be outlined. They need to be very detailed, and you need to have some fair market values on there. And I think a lot of people lose out on the fair market value because if you're giving up, I don't know, an old shirt or something, and the fair market value is probably higher than you're thinking it is.
Could be.
You
Yeah.
know? So
since you represent people also in IRS audits, like audit defense, what are some of the things that you see people take deductions on that they probably shouldn't have? And maybe they thought it was a common deduction. Is there anything that pops in your head?
yeah, the number one, probably most abused and most audited. Well, there's a couple actually. Home office deductions get audits quite
Like
a lot.
a red flag trigger.
Yeah, I mean, people just go. There's that saying, pigs get fat and hogs get slaughtered. I mean, and that's home offices when a lot of taxpayers just turn into hogs. They start seeing it and they go crazy and they claim way more than they should. The other one is unreimbursed employee business expenses. Now think about this. How many people work for a paycheck and have
So you're W-2 employee.
You're a W-2 employee, and then you have expenses that are unreimbursed by your employer. Now, teachers are a really good example. They are just really nice people and they spend a lot of money on supplies for kids and stuff like that. They're a separate
everybody
category.
knows they got deductions that are not reimbursed.
Yeah, that's a separate category. But how many other employees actually have unreimbursed employee business expenses? I mean, how many employees are expected to drive for their job and they don't get reimbursed? So I see this.
Gosh, that was loud, Pat. You're supposed to tone that down a little bit.
It catches me sometimes.
So you're an employee. What's some of your deductions you're sliding in there? You got any?
An employee?
Are you an employee?
I'm an employee, but I don't have any deductions.
So you're not putting any in there.
And that's right. I mean,
most
most employees don't have unreimbursed employee business expenses. So
I'd like car reimbursement as far as I drive.
Darrin's
nice,
got me
right?
so scared of the office at home. I don't even take it, even though I have a home office and a real office. I'm like, no, that's got to be a red flag, even though I have both. Well, you're listening to the IRS Solution Attorney Show, and since the music's talking over me, that means we have to take a break. So we'll be back in just a minute to continue our 9 strategies to help you save taxes in 2016. Back in a minute.
are you suffering from IRS problems? Do you owe back taxes you can't pay? Is your paycheck or bank account being levied? Or maybe you haven't filed tax returns in years and simply don't know what to do. This is Darrin T. Mish to tell you that if you're tired of IRS problems hanging over your head and are ready for a fresh start, we may be able to help. Call the law offices of Darrin T. Mish at 888-GET-MISH, 888-GET-MISH. I can help you file old tax returns, work to release tax liens or stop wage levies, even negotiate deals to pay off back taxes at a discount, sometimes for pennies on the dollar. Hey, let's face it, these days it's not hard to get into tax trouble. A divorce, failed business, health problems, you name it. The point is, IRS problems may be solved if you're willing to take the first step. Call for a free consultation at 888-GET-MISH. That's 888-438-6474. Or go to the web at getirshelp.com, because the one sure thing is, IRS problems don't solve themselves. So get MISH. 888-438-6474. Principal Office, Tampa.
Welcome back. You're listening to the IRS Solution Attorney Show, and I am your co-host with Mr.
Darrin T. Mish, the IRS Solution Attorney.
With the deep voice.
Absolutely. At the break, we were talking about unreimbursed employee business expenses, and during the break, you and I off air here, we're talking about an example that came into the office just a couple days ago.
And before you jump into that, in case someone's popping in and out of the car, the things we're talking about right now are the 9 strategies to help you save taxes in 2016.
Absolutely.
And the last thing was the employee unreimbursed expenses for wage earner employee people.
Right. So if you're a wage earner, you're getting a W-2, you have taxes withheld, you're actually an employee of someone else. One of the most common audit traps that I see is actually claiming the unreimbursed employee business expenses on Schedule A as an itemized deduction. There was a gentleman that came in, he and his wife came in, and their adjusted gross income, so their total income combined was about $115,000. And he prepared his own taxes using our favorite software program. And he wondered why he was being audited, because that's why they had come in to see me. And I looked at the return and I was like, well, there's $42,000 here in unreimbursed employee business expenses. That's probably the problem right there. So that was what he had done. He had claimed all of their commuting miles. That's a real common red flag, as well as that people think that commuting to work is tax deductible. Boy, do I wish that was the case, but it's not.
And it's not really a case. Like the mileage is meant for people like me that physically drive to properties, that physically drive to meet customers in places other than my office.
Right, absolutely.
To physically go see a property we're going to list.
So we can go over the commuting rules real quick. So if you do drive for, if you're an independent contractor or something and you drive for, your business, I would say the commuting is from your home to your office is commuting, not deductible. And then any trip you make from your office to an outside site, for example, you're showing a house, that's certainly deductible. And then the rule is if you leave that house and then that you just shown and you drive straight home, that's also not commuting. So that's deductible as well. It's just the trip from your home to your primary place of business that is commuting, and that's not deductible. And that's one of the things that this couple had done. They had also written off a lot of business clothes and things like that. They weren't uniforms. Typically, the rule is if you wear a uniform with the business name embroidered embroidered on it, or what I like to think of as the mechanic and his, name tag says Bud with the blue shirt, then that's obviously a uniform and that's obviously deductible. But for example, lawyers always want to deduct their suits and their ties and their shirts and stuff like that. Again, totally wish that was the case.
I think it should be. It's not, but I do think it should be.
Well, okay, so we need to elect some, smart people up in Congress and pass the lawyer fancy suit tax exemption.
Well, there's
I'm sure
a lot
that'll fly.
of people that kind of have to dress up. Like, you can't show up in shorts and flip-flops.
I agree. Well, you can in Key West.
I mean, you could, but depends on who your clientele is and what your job is.
It'd be real confident, right?
So the third thing we see is tax documents organized, getting those things in order.
Yeah, it doesn't have to be real complicated. So the W-2s and 1099s and 1098s and now the 1095s, which is for health savings accounts or health medical insurance, those things all come throughout, January and February, right? I have a real simple system. I just have a place right on my desk. They just kind of get put in this one slot, and they're all there ready for me when it's time to get the tax preparer to do the returns.
I do that too. I stick like vacation paperwork, travel paperwork, like anything like that goes there.
The one thing you could do to take this one step further is as you get them, you could scan them and then you could put them in someplace like, Dropbox or, Google has free Google Drive and all, one of these free, data storage services. And that would be a good place to have it so that you can send that over electronically to your tax preparer.
So the fourth thing is maximizing your retirement account. That's a good one. And you get extra time for that.
Yeah, you want to go ahead and maximize your contributions to your 401k or 403b, those things that you have at the office, for your employer. And you want to go ahead and maximize those matching contributions too, right? I mean, if they're going to go ahead and double that money.
Oh, yeah.
I've never been in that situation because I've been self-employed for, ever. But you definitely want to make sure that you take advantage of those things. And you do have until the tax filing deadline to make those contributions for the prior year. So you're going to want to make sure that you do that.
And I know that, Dave recommends Roth IRAs, which, pay the taxes now, but don't get taxed on the growth later.
I totally agree. I mean, if you are under the income limits for a Roth IRA, then you definitely should do that. It's not going to save you any money on your taxes today. So it's not instant gratification. But boy, I'll tell you, when you're past 65 and you're taking those, you're taking those withdrawals out of that Roth, you're going to be one happy camper that you don't have to pay taxes because you did it when you were young.
And hopefully they don't change the rules on us. That's what I worry about.
I don't think that's really that realistic. You'd have a lot of people really up in arms.
I think so too. But aren't 4 and 5 kind of like interchangeable, maximizing your retirement account and maximizing your IRA?
Well, your IRA is a little bit different than your retirement account in the 401k kind of scenario. So if you have a traditional IRA, or if you don't have a traditional IRA, then you want to go ahead and open one so that you can at least contribute up to $5,500 if you're under 50 years old and $6,500 if you're over 50 years old. And that keeps that money from being taxable. Of course, you have to pay taxes on it later when you make those withdrawals. But for most people, I would assume they're going to be in a lower tax bracket after retirement. So it can make sense depending on how you see things going in your future and what your retirement, plans really are.
So this is number 6 on our list, but I have a feeling it should have been at the top. Make your estimated tax payments. We talk about that almost every show.
I feel like I talk about estimated tax payments just about
every
all
hour?
Day, every day. Yeah. Estimated tax payments.
Heather would probably say you do that in your sleep, right?
Heather's my wife, for those of you who are listening.
Yeah, we both have our own spouses.
Yeah.
We've got that question before.
Yeah, we're definitely not married.
Are you married? Do you work together? Are you partners? No. We're not partners. We don't work together. Well, sort of, but not indirectly. We work together, I guess, is a better way to say it.
Partners on the show, for sure.
Partners on the show. And we have our own spouses.
So estimated tax payments are those things that, independent contractor, self-employed people are supposed to be making. And that's, you make those payments on what we call Form 1040-ES, and you can download that from the IRS at irs.gov. My favorite probably myth in the tax, world is that tax ES payments have to be made quarterly. Well, they do have to be made quarterly at a minimum, but I typically suggest that people make those estimated tax payments more frequently than quarterly because as human beings, we don't budget quarterly. We don't budget on a 90-day cycle. We tend to budget, if we budget at all, on a week schedule or a month schedule, but certainly not a 90-day schedule.
If you're ever somebody that's been in this position and you've owed the IRS money, and I have, I wish I had met you at that time. I didn't. If you're smart, you learn very quickly. And so for me, I don't even take money unless I make a tax payment.
Yeah, absolutely.
They just go hand in hand.
That's a lesson that was hard learned, right?
So whether that's for me, it's once a month. For some people, that might be once a week. For other agents, it might be whenever they get a commission check.
Right. So you're probably doing more than one closing a month. So you can go ahead and budget that monthly. But some agents are doing, one every couple months or one every month and a half or 3 months or something like that. So I would suggest that they go ahead and take those estimated tax payments out at the closing table, and they can still feel rich for that day, right? They're just a little bit less rich because they paid the tax man in advance. I think it's a really good idea. And it's a way to keep from creating these problems that I've, dedicated my entire professional life to solving.
If you're already in there, Darrin can help you. His number is 888-GET-MISH, so don't feel bad. But if you're not in that place, today's show is for you because we're going to try to help you keep from getting there.
Absolutely.
So number 7 is lower your taxable income. That's a good one.
Yeah, try and get that taxable income as low as you can. I mean, so if you had moving expenses for a job, you want to go ahead and deduct those. If you want, if you had tuition or fees for education deductions, you want to make sure you get those. If you have the educator expense deduction that we kind of talked about a minute ago, you want to make sure that you get those. You want to make sure that if you bought health insurance in the health insurance marketplace, the Obamacare thing, and you received a premium tax credit, you might even be able to get a bigger premium tax credit when you file your taxes if your taxable income is actually lower than you had anticipated when you applied for the Obamacare. Does that make sense?
Wow, that was a whole lot.
So if you think when you sign up in the marketplace
for Obamacare
the Obamacare insurance, then you had to estimate what your income was going to be, and then they give you kind of like a credit off of your health insurance for what you estimated your income was going to be.
Oh, gotcha.
If you're in the situation where your income actually came in lower than that, then you're going to have an even bigger, reduction on that tax credit.
Because they give you a not a supplement. I can't spit it out. They give you a oh my gosh, I can't spit the word out.
It's they reduce the tax. It's a subsidy.
Yeah. Subsidy. Thank you.
You're close. Supplement, subsidy, same thing.
It's not working. I need more coffee. So what about, and this is like the magic question nobody can answer, but like, isn't there certain thresholds where your tax bracket actually changes, right?
For sure. And,
so that might be something to be conscious of, like, especially if you're self-employed, you might not want to take that last extra distribution because it may throw you into a different tax bracket.
Yeah, and that would be if you were an LLC, if you're a corporation, you might not want to take that last distribution, but then the corporation's likely going to have to pay some tax. So, that's a little bit above our pay grade today to be discussing on the radio, I think.
Yeah, CPA planners certainly help a lot with that. You're listening to the IRS Solution Attorney Show. We are live in the studio today at 888-404-1010. We are talking about 9 strategies to help you save taxes this year in 2016. And we'd love to answer your question, too. 888-404-1010. If you call in, you will be registered to win an FPU scholarship from Money Talk 1010. Thanks so much for joining us this morning. We will be back in just a moment. Moving on to number 8. Back in a minute. Welcome back. You're listening to the IRS Solution Attorney Show with Mr. Darrin T. Mish. And
that's me.
I'm your co-host, Katrina Madewell. I'm just here to make it fun, to make sure he doesn't show up as the boring attorney on the show. Today we're talking about 9 strategies to help you save taxes in 2016. I love to razz Darrin, so I'll keep it fun.
So number 8, this is not that obvious. Check your W-4. The W-4 is that form that when you're an employee, you send to human resources or personnel, and it tells them how many tax exemptions, so how much money you should have withheld from your paychecks. And
does anybody ever even look at that thing though again once they get hired?
Not often enough. So
if you forget about it.
So if you have, for example, if you have a new baby, you're going to want to make sure that you change your W-4. You want to probably add a number. If you have a baby who is not quite so small anymore and is moving off to college and is going to be claiming themselves on their tax return, you're going to want to make sure you take them off. So, you want to make sure that you adjust your withholdings on that W-4. If you owed last year, for example,
did they fill a new one out? How does that work?
you can fill one out. I don't think it's as often as you'd like, but you can fill those things out more than once for sure. And you can get that form at irs.gov as well. It's about a 9-page form that the instructions are about 9 pages, and the form itself is like 1/3 of 1 page.
Does anybody ever read that stuff?
I don't think so. I always tell people that would be the single best way to fall asleep at night is trying to read the instructions for the W-4.
No, I think reading mortgage documents would do it.
The tax code.
Yeah. You got me trumped on that one for sure. For sure, the tax code, all bazillion pages of it.
So the 9th and bonus strategy that I was thinking about this morning was a health savings account. Health savings accounts are really, really cool. I've had one for well over a decade, And what a health savings account is this. You get a high deductible insurance policy, kind of like what you get on the Obamacare exchanges, but they're actually better. So for my family, I believe that our deductible is around $7,500, but our monthly premium for a family of 4 is only $400 a month. So, I mean, that's really, really reasonable in my world, at least. $400 a month for a family of 4. I wish it was less, but it's not. And then
You're lucky it didn't give more after Obamacare.
yeah, it actually did go up a little bit, not that bad. And this is through Humana, mine is. So lots of these big companies actually offer these things. But the best and the coolest thing that offers tax advantages is you can put up to, I believe it's $6,750 pre-tax, untaxed money into your health savings account, and then you can use those for your medical care and your medical expenses. So,
Well, we have teenage kids. So, like, last year we maxed it out because our oldest daughter was getting braces.
so you have one as well. Okay, so
Yep.
you can pay for, I'm not going to issue an opinion about braces, but you can go
Well,
ahead and,
the truth is I didn't understand what it was for the longest time or even how it worked.
oh, okay, so
And I imagine for the person listening, they're probably thinking the same thing. HSA health savings account, like, what is that?
I really actually think this is the solution, the real solution to all of our healthcare problems, is because when you actually have a say in how expensive things are, how much things are going to cost with regard to your family's healthcare, when you care what they cost, then what you do is you naturally go, either sometimes you decide not to have a procedure or a test done.
Or you
I've
shop.
done that. Or you shop, or you ask the doctor what things cost. You'd be amazed. Doctors, if they're going to get paid cash today, or, you use your HSA debit card today, they'll cut the price often by, as much as 60 or 70% because they don't have to pay their billing clerks, for a year to collect that money from the insurance company. So we use ours for,
Plus a bird in the hand is two in the bush,
I-
right? Like
absolutely.
money today versus potentially chasing money tomorrow.
Absolutely. So we use it for copays, out-of-pocket prescription costs. You can actually use them for over-the-counter medications now, although I think that's a bit aggressive, might be a little bit hard to prove.
What I found is, like, you talk about over-the-counter stuff. A lot of times, like, for example, me and my son both have sinus stuff. So, like, the Aleve D really helps. But I try to go swipe my HSA card, and it won't work. Like, they just, some things they take and some things they don't. Like, they decline it or take it off or say, this is your balance due, like, for whatever they're not covering. And then, but if the doctor writes a prescription for it, like the pediatrician did, basically, they literally take it out of the box and fill it like a prescription. It's wild.
Yeah. So the other thing is make sure you shop your prescription medication costs. I am absolutely astounded every time someone in the family gets prescribed something. We have a list of about, I don't know, somewhere between 4 and 8 pharmacies that we call. We call Walmart, we call Publix, we call Sam's Club, Walgreens, CVS, and the prices are all over the place. You might have a quote of $200 a month from one pharmacy, and it might be $20 at another pharmacy. So you want to make sure you go ahead and shop that stuff.
I never even thought about that. Like, that's significant.
Yeah, and I'm not exaggerating there. We really have seen those. And for some of the most commonly prescribed things, I mean, some of these stores have them for either $4 or free. I think it's Publix has them. Has
Some of the
a lot
antibiotics.
antibiotics and stuff for free.
I know I get migraines, so, the prescription stuff can get very expensive, at least the stuff that works.
Yeah, absolutely. So the health savings account is it's not something that you could probably use to plan for 2015 now because you kind of already have that in place, but it would be a really good idea to investigate those if you're in a situation where you're self-employed or have to provide your own health insurance. I would really encourage people to check out those health savings accounts. I think it really is the solution to the healthcare crisis in this country is make people care what it costs. When you have full coverage and it's provided by your company or something, and you go to the doctor, you don't really care what it costs.
Well, some of that stuff is kind of Greek too. Like, I think when you look at it, and even for somebody like me, it's overwhelming. Like, I don't know anything about that space. And it's probably how most people feel when I'm walking into a real estate transaction, right? They don't know anything about that space or yours, the IRS space. It's overwhelming.
Absolutely. So you just want to make sure that, check it out and, shop it around and see if you can save some money on your healthcare and your taxes.
I think there's a job just for that, like to search that stuff.
I'm sure
it's
there
a
is.
company in the making. We are live in studio today, and we went through our 9 things to save you money on your taxes in 2016, and we're going to open it up to some calls from listeners at 888-404-1010, 888-404-1010, and we also get questions on Twitter at Darrin_Mish. And then on your Facebook page, the IRS Solution Attorney. Do I have that right? IRS Solution Attorney Show. Is that your Facebook page?
No, the Facebook page is just Darrin. It's just Darrin
Darrin
Mish.
T. Mish.
Yes.
Darrin Mish.
Right.
Anyway, we get questions, and so we got one from Stacy. She wanted to know, where can I buy your ebook, The 7 Secrets the IRS Doesn't Want You to Know About?
Well, certainly I want you to buy it. You can go to Amazon.com. I believe it's on sale there. You can buy it in hard copy or ebook there on Amazon.com. But there's a little secret. You can actually get it for free by visiting my website at getirshelp.com. You got to scroll all the way down to the bottom. You just enter your email address, and we'll send it out to you.
Or if you call the show, Pat George can take your information, and we'll get you one in the mail, too.
Absolutely.
So another question we got from Carl is, when is the deadline for sending out the 1099s to contractors, and is there a penalty for being late on them? That's a good one. That's right on time.
Yeah, the deadline for sending out the 1099s is January 31st. There's lots of 1099s that get sent out late, so there are definitely penalties.
To who? The employer?
The
person
issuer.
that's in it?
Yeah. We had that question within the last couple of weeks where someone said, I didn't get the 1099 I was supposed to do. What should I do? Should I leave it off, or should I? The question was like, should I double it up or put it on next year or something crazy like that? No, you actually should have records of what, the issuer of a 1099 actually paid you. So you don't really need that 1099 to file your returns. But if you don't have those records, then you can probably call that issuer and ask them to issue you a 1099. There are penalties. They range anywhere from, $30 for being a month late to $250, a month.
Wow.
Yeah. So
I have to laugh because, one of your colleagues in the attorney space, Jim Souza, he's going to be on my show tomorrow, Tampa Home Talk, talking about how to seal and expunge criminal records. And, we were talking about, I lost my train of thought. I can't stand it when I do that. So I have to write everything down.
Were we transitioning?
Does that mean I'm getting old?
Were we going to talk about old Plaxico Burress and his
No, I had
criminal
something
problems?
that was right on time. It was a question. Oh, I know what I was going to say. So Jim says yesterday when I talked to him, he said, I could go to a party and, it could be all attorneys or some attorneys, and Darrin will be the only one in the room that nobody wants to talk to. Nobody will act like they know him. That's what I was going to say. So I was going to say, if you have a tax question or problem, you don't have to be Charlie or Pat or Katrina. You can just call in and be Sally or Joe and just ask your generic tax question or IRS question. 888-404-1010.
Despite Jim's assertion, I just had a lawyer in my office as a client yesterday. I represent lots and lots of lawyers. They're actually
and realtors
disproportionately represented in my practice as having tax problems.
But I think that's funny. Like when he was telling me the story, I'm picturing this in my head of like all these attorneys hanging out at a cocktail party and Darrin standing over there by himself because nobody wants to talk to him.
Nobody wants to admit that they're already on my client list. That's what he was actually getting at. So yeah, I do represent lots of lawyers, lots of doctors. Lots of people you would think wouldn't find themselves in tax problems. And that's one of the really interesting things I think about my practice area is that it really straddles all areas, all socioeconomic breakdowns. So it's everyone from, the people making $20,000 a year to, I have people in the office.
NFL players making several million.
Yeah. Former NFL, NHL, NBA, Major League Baseball players come in, and after their careers are over, it's not uncommon for them to run into tax problems.
Now, how can that be if they're not getting paid anymore? What kind of stuff do you see?
Well, one of the things is they tend to go into their own businesses or they have some kind of self-employment type income.
We're looping back to this.
And so they don't make estimated tax payments because they used to have managers and people, agents and stuff that did everything, literally did everything for them. And so they try, or what I've seen is they have become accustomed to this very high-end lifestyle, and their income is not matching that high-end lifestyle. And so there's some things that they have to learn to do themselves that is kind of a new thing for them.
What kind of businesses do they go into? What do you see? Is there some common denominator there?
I see construction as quite popular, or businesses peripherally related construction. So that's a real common thing.
So,
I think it's probably because it's manly.
They can't exactly be teaching ballet. There was one NFL player that took ballet. I can't remember who that was.
I'm sure it does wonders for balance and strength, and those ballet.
Sometimes they got to get on their toes to make those catches.
Those male ballet dancers, not to take anything away from the female ballet dancers, but I mean you can really see the muscles and whatnot. It's just not something that we stereotypically think of as being particularly masculine.
So Plaxico Burress, he gets 5 years probation for tax evasion. In the news.
Yeah, actually, this was on a state case up in New Jersey, and apparently he made $1 million of income in 2013, which I guess is kind of low. I mean, he's a former ball player at this point in time. But
Plaxico's going to have to wait till after the break. You're listening to the IRS Solution Attorney Show. Much better, Pat. Thank you very much. He's not even listening to me. He's talking to Charlie back there. But you're listening to Money Talk 1010. I'm your co-host, Katrina Madewell. You got Darrin T, Mish, main man on the mic, answering your IRS questions. We'll be back in just a minute. You can call us. We'd love to talk to you this morning. 888-404-1010. 888-404-1010. Back in a minute. Welcome back. You're listening to the IRS Solution Attorney Show with Mr. Darrin T. Mish, and I'm your co-host, Katrina Madewell. Welcome back.
Welcome back. So we were talking about Plaxico Burress and his little troubles with the state of New Jersey before the break. And apparently what happened is Plaxico filed his tax returns for 2013, and he allegedly made an electronic transfer to pay the...
Sorry, I'm laughing. Allegedly is such an attorney word. I just have to laugh.
You have to say that or you get sued for defamation. So he allegedly paid the $46,000 via electronic wire transfer, and it didn't go through. So what we used to call that as a bounce check. Okay? So the electronic wire transfer bounced, and the state of New Jersey tried several times to contact Mr. Burress to get him to pay those taxes, and they were without success. So they decided
call
to.
his agent.
Well, so they decided to. Well, the agent's probably not getting paid that much anymore, right?
No.
Because he is a former player at this point in time. And so they decided to charge him with tax evasion, and ultimately he was placed on 5 years probation. He was given, he has to pay back, I believe it's $53,000 or $56,000 in back taxes and penalties and whatnot. But Plaxico, other than catching the game-winning touchdown in a Super Bowl, was also famous for accidentally shooting himself in the leg with a handgun he should not have had in a bar in Manhattan.
Oh, yeah, I forgot about that.
So yet another story of a former athlete whose life is sort of spiraling downhill at this point. I hope it works out for him. I mean, there's really no reason for him to unless he didn't have the money, let the taxes slide that far. And even if he didn't have the money, if he'd have just kind of communicated with the state and worked out some kind of plan, I'm quite positive he would not have been criminally charged.
But we talked about this before on the show. They like to make an example out of the people in the spotlight so that they think, oh, if they'll come after that person with money, then they're going to come after me.
Absolutely. The taxing authorities, there are so many people that owe taxes out there in our population that there's no way the taxing authorities like the IRS or the state of New Jersey in this case can actually prosecute everybody. So they have to go ahead and go after the high profile people like Plaxico Burress or doctors or lawyers and things like that, so that it makes the news, so they get some pop, so that people on radio shows like this talk about it.
Exactly.
So that more people file and pay their taxes on time.
So there was also a North Carolina judge that made the government actually pay legal fees to a store owner whose $107,000 was seized by the IRS.
Yeah, what happened in this case, it was actually a restaurant that accepted cash only. And there's a law that says that if you make deposits of $10,000 or more in currency, the bank issues something called a CTR, a cash transaction report, or currency transaction report to the federal government. Now, there's nothing in and of itself, as far as I know, illegal about depositing $10,000 or more in cash. But there is something illegal about structuring, which is what the government calls this, where you structure your affairs such that you always make cash deposits that are just a little bit shy of $10,000. So in this case, what happened is the government actually...
They have people that watch that stuff, too. I know people that do that for a job.
Well, what happens is at the banks, when they see large, cash deposits being made, then they start to get suspicious, and then they think they have a duty to report this to the government. But in this case, what had happened was this restaurant only took cash. And so the government accused them of structuring and kept their $33,000 for over a year and a half. Well, this upset the restaurant owner greatly, I'm sure. I can tell you right now that if you took $33,000 out of my business, the
fight would be on.
It would make for very unhappy days at the Mish household. So they went ahead and sued the government, and the government ultimately had to repay their legal fees in the amount of $107,700. So the little guy won in that case. I wish it happened more often.
I was joking before on another show, and I'm like, so if I transfer like $9,998 just because to different bank accounts, you think it would irritate them?
Yeah, you might actually get... somebody might accuse you of structuring.
And that's the crazy part. Like, it could be my own money. I could just do it to play games and see who's following me. but it'd be more trouble than it's
Could end
worth.
up being a pretty expensive game you're playing there.
You can laugh at me, Pat. It's fine. I wouldn't really do it. It's a good thought in theory. It's that little devil on my shoulder that pops up and tells me to do it.
And she talks about it. So it's about that time, right, for the IRS train wreck of the week. So in this segment, this is where I talk about cases that came into the office. They came in as a train wreck, and they always leave much better off. In this case, it's one of my favorite stories, actually. This was a case where there was a husband and wife, and they lived down in Southwest Florida. And they had racked up quite a hefty tax bill over the years. It ended up being $191,363.19, actually, to be exact.
Wow, 19 cents.
And this occurred out over a period of over a decade or so. They were self-employed at one point in time, but at this point, by the time they came to me, they were retired, and one of them was actually terminally ill with cancer. And the IRS was really hassling them. They were levying their Social Security accounts. They were basically making life
I wouldn't
really
even
miserable.
think they did that.
Yeah, it was rough, and they were in dire straits. And so in this particular case, what I did is I went ahead and I did something that's very atypical of me. I submitted an extremely low offer. And I did it because I was just irritated at the government, and I wanted to stop the levy, and I wanted to see if I could get it done. So what I did is I offered $50. Now, there are people at the IRS who would
How much was that tax bill again, Darrin?
It was over $191,000, but I offered $50 just because I was irritated at the situation, and I wanted to see what the IRS would do. And so what happened is, after it was between 6 months and a year, the IRS came back and they said, well, there's just one little problem with this case. I can recommend this case for acceptance at $50, but there's one liability that's separate. So in other words, one of the spouses was only on one tax year, and it was another significant amount of money. And so they made me offer another $20. So we ended up settling the $191,000 case for a grand total of $70. Now that is not typical. That is not normal, but
these are the cool stories to talk about. This is the fun stuff.
It did in fact happen. And I'm pretty proud of that one. And it really changed their life. And it helped make sure that the end of life for the one spouse that had terminal cancer was a lot better, for them. So their last remaining days were
in that
happier.
Scenario, like let's just imagine that person didn't call you or talk to you, and then the one spouse passes and say there's life insurance and they get it. How does that play into the whole I owe the IRS money?
Well, if it was a joint liability, then the IRS would certainly be entitled to the proceeds of the life insurance. And in aggressive cases, they might even levy the proceeds from the life insurance.
So swoop in and take it out of the bank account?
Yeah, they could issue a levy notice to the issuer, to the life insurance company, and say, hey, pay us instead of pay them.
So intercepting the money?
Yeah, so it could have made a real big difference in their case. And but I was really just more proud of just making sure that the last days of that person's life, they didn't have to worry about the IRS. It happens quite a bit when people come in and
You're killing me, George. You're killing me.
They come in and they have some kind of terminal illness like that, but they also have a tax problem. And I like to tell them, hey, let's worry about just making the last part of your life the best part of your life, and let me worry about the IRS.
Darrin's not like these traditional attorneys. He really does have a heart. He's like a big teddy bear. He cares.
Contrary to public opinion.
That's right. Not all attorneys are the same. You're listening to the IRS Solution Attorney.